Let's turn now to Stephen Wood to find out where he's finding good stock buys. He's Chief Market Strategist with Russell Investments. So, Stephen, nice to have you with us. Are you finding that stocks are just getting too expensive?
Well, I think in the U.S. market, we're seeing a fair valuation on the market. So when you look at the earnings, PE, so how much can you buy in earnings for what you're paying for stocks? I mean, it looks kind of fairly valued. It doesn't look overly expensive, but it certainly doesn't look overly cheap either. So from our perspective, if we confine ourselves to the U.S. market, I think we're seeing an environment where stock picking, stock selection is going to become more important. Valuations are always important, whether it's growth or value selections. But stocks right now, they don't look overly rich, but we think it's going to become more of a stock pickers game, an active management game, and picking those companies that not only have great earnings, but in this environment that can really drive revenue. So I think revenue is going to be far more important for stock performance going forward.
Did you agree with what SEMA just reported, that new tech is the place to find the good deals?
Well, I think it's a part of it, and we would look at a multi-asset strategy. We're not only looking within tech, but energy, healthcare, the broad array of the best companies within equities, but also we're looking globally. So we want to understand our valuations more attractive in Europe and the United States, for example. So look at emerging markets, looking at Europe, and where can those really strong balance sheets, those revenue drivers, be had for a valuation discount. So I think we would look within equity space, but also look globally to see where the opportunities exist.
You sound very upbeat and positive, and I know there's a lot of positive feelings out there in the market, but aren't you a little bit nervous when you see even the Russell 2000 hit an intraday new record high during the day, S&P at a new record, stocks like Google, getting above $1,000? Doesn't this make you a little bit more cautious?
Well, we're always looking at what are the risks and the opportunities in the market. So we talk about this stuff every day, every week, all month long, all year long. So for us, this is nothing new. So when stocks pull back, we have the similar conversation. But you're right, the Russell 2000 small cap stocks are right at an all-time high. The Russell 1000, which is large cap space, is at an all-time high as of today. So, but within that space, we don't see an over or stretched valuation. We just want to know what are the names that have better and stronger balance sheets. Because if you look at the earnings environment right now, you're kind of, right around market averages. But when markets tend to do well, people tend to bring up these concerns. But we would also look at Europe. We would look at emerging markets. We would look at commodity space, infrastructure, take a very multi-asset approach to this.
All right. Let me ask you this. I mean, it doesn't take much, as you know, to trip up this market. All we need is a negative economic report out of China or something like that everybody gets very nervous. So how should investors protect themselves as we have these rallies? Would you recommend sell into the rally, take your profits?
I think they need to take a very actively managed strategy. So rebalancing is a part of that, looking where valuations are richer, more attractive. So again, this globally diversified multi-asset strategy, it's not about one versus the other. It's about how do you combine them in a total portfolio. And I think if you look at what can trip us up, political risk, which we've been seeing a lot of recently, I mean, that could be an opportunity. And we would look at what happens in Washington. If the market were to pull back, that would be an opportunity. Military interventions tend to be opportunities as well. But I think perhaps most importantly, the Federal Reserve is going to keep interest rates very low for the foreseeable future. And that is going to be a natural wind underneath equities right now. So we're constructive. We understand there's going to be volatility, but going into 2014, again, globally diversified strategies would make sense to us.
All right. Sounds good. Thank you so much, Stephen. Have a great weekend. Stephen Wood, Chief Market Strategist with Russell Investments.